Good evening, this is Ryan Mallory for SharePlanner.com. Today is August 9th, 2010. Happy Monday to you guys. In any case, wanted to give you guys a market review and a look forward to the day tomorrow where we have the FOMC statement, better known as the Federal Reserve's statement that they release every 6 weeks. That really doesn't tell us anything new per se in terms of interest rates, as they've been holding these rates at a 0 to a quarter% for an extremely long time now, and I don't think they'll change that anytime soon, especially not tomorrow. But in any case, we do have that comes out at 2:15 tomorrow, and you can definitely expect a huge reaction from the market when it does come out, regardless of what it says. One of the things that I have learned from watching the market reaction to the Fed statement every 6 weeks is that when it hits at 2:15, the market tends to have a violent reaction to it one way or the other, either up or down, and then it has another reaction that tends to go in the opposite direction. Well, my experience is that usually that first initial reaction tends to be the true sentiment of the market. That meaning that's where the market is ultimately going to go. So when it comes out, you'll see this maybe, for example, a huge upswing, and then right away you'll see this downswing in the market. Well, usually that the move upwards tends to be the true sentiment to the statement that the Fed released. So keep that in mind. As for the S&P 500, we've been talking about this 1131 mark here that I continue to highlight in every one of these video broadcasts. Today we got darn near close to testing it. I guess you could probably say it was a test. It got up to about 1129. The test is at 1131, so your true technicians will say, oh, that was definitely not a test. I tend to say that it was pretty close, maybe a tie. But as you can see, though, you have your 1131 mark right here on the S&P, and then you have this 200-day moving average that is basically parallel to it. And it's got the price basically wedged right in between these two barriers. So it'll be interesting to see which support level gives out, because one of them is going to be given out here in the next few days or week or so. But I would suspect that either 200 or the 1131 mark, almost certain that one of those two are going to be violated tomorrow. I believe it'll be the 1131 mark, just basically because the Fed over the course of Bernanke's tenure has tried to put as much of a spin on the FOMC statement as possible. So I would say 60 to 70% of the time we have a positive reaction to the FOMC statement. So if you look at that particular trend, more than likely we're probably going to break that 1131 mark tomorrow if indeed the reaction to the statement is positive. Another thing I want to bring to your attention too, and I was just noticing this today, and that is a little bit of a bearish wedge that is forming on the S&P. I'll show it to you here. And that is where the channel that the price is trading in continues to get narrower and narrower, and if you're looking at the technical charting playbook, it would say that it breaks this level right here, or it tends to break this level right here over time. That may be the case, but I tend to believe that this trend line right here, that is connecting the lower or the higher lows, is a very strong force right now in the market, and has seen every test of it being bought up by the bulls. So I think this overhead price channel will be much easier to break versus the lower channel. In any case, look at the positions I got in the portfolio here. This is Intel. Not a great day per se. It sold off early on, and then it worked its way back, and then last few minutes of the trading session it did give back a little bit of its gains, but it's still stuck underneath this 50 and 200 day moving average, which is acting as some pretty heavy resistance right now. So we'll have to continue to watch that in the coming days, but right now I'm not overly worried about that. Visa was a surprise play today. I didn't expect them to do this well. They were up about 3.5%. As you can see here, it's got a nice little bottom that it's formed over the past 4 months or so, 3 months. And this $70 price level is acting as a strong force. It was able to reclaim the 50-day moving average, but we'll see a test on this decreasing price channel here. So that's something to keep an eye out in the days ahead. XLF, which is an ETF on the financials, continues its uptrend. It has the 200-day moving average just overhead. It wasn't able to break through it today, but has done so in the past week or two, and so that shows that the 200-day moving average is vulnerable, and if the market continues to move up, it'll blaze right through it. ENZM, one of my newer additions to the portfolio, has been doing quite well of late, bouncing off the trend line from Friday, and continue to do the same again today. I'll extend this just out a little bit further here. Bounced off the trend line, moved up, did see some resistance at the 50-day moving average as well today. And then I have SPY. I made a trade on this today, and I'll go over that with you guys here real quick. Actually, if you looked at my post from earlier today, the gap trade, I highlighted this trade in great detail, but I'll go over it again just for the sake of it. As you can see here, today was where we opened up here, right here at the 112.92 level. Here's where we closed from the day before, which was around 112.41. The market was driven by no news, by no particular reason. Well, the European markets were up, but I didn't think that was a big factor causing the markets to sustain its gap up this morning. So no real news drivers. It wasn't a big gap, so it wasn't over 10 points. It wasn't too small of a gap, meaning like 1 or 2 points or less. And there was no news event behind it. So I pulled the trigger on that this morning, and turned out to be a very good trade. Zoom in on it here a little bit. We come in here at this point, sells off immediately with 3 straight 5-minute candles. We get a doji. I thought I was going to get my position filled right here because that was shorting the market, so I was hoping to get cover my short position. We did, and it bounced up a little bit, and then 10 minutes later it finally did fill the at about 9:56, I believe it was, fill the gap. And you can see it did not stay at that level very long. It came down and tested it again, but then the rest of the day it was pretty much just steadily increasing in value. So that was my lone trade of the day. I stayed out of the market outside of that for the most part, and for now, that's going to be a wrap. I hope you guys have a great evening, and if you guys have any questions, as always, either leave it in the comment section, which is probably the preferred method of my articles, or send me an email. Look forward to trading with you guys tomorrow.